Okay, if you're considering buying a business in California, one of the things you must do is make sure you don't become personally liable for any taxes due by that business for activity that may have occurred before you ever came into the picture. The way to do this is to request a tax clearance certificate from the state of California. The clearance certificate basically guarantees that there's no taxes, penalties, and interest owed by the business that you don't know about. However, if you learn about a pending tax liability and you're the buyer of that business, you're required to withhold from the amount you pay to the seller the sales tax, penalties, and interest that's owed, or you become personally liable for those amounts. Also, if you don't request the clearance certificate, you can become liable for things that are discovered in audits on your watch for activity that you had nothing to do with because you didn't request a tax clearance certificate. The Board of Equalization has up to 3 years from the date they're first notified that a business is sold to come after the successor for sales tax liability. This exposure for successor liability for taxes in California almost guarantees that you're going to get a sales tax audit in the year that you sell. Matter of fact, if the state of California isn't approached, they find out from the escrow company themselves that there's a very large amount of money sitting in escrow waiting for the sale of a business to close. They see that as low-hanging fruit. They will open up a sales tax audit at that point, knowing that the funds are already in an escrow account available for them to come get. So you're at high risk for a sales tax audit, even if you've never had one if you go to sell your business. Oftentimes it takes a guy like me to come in, get that sales tax audit closed, because they're not going to give you money until you settle on that sales tax audit, and it's extortion, nothing short.